Hello, folks. Welcome to Pro Trader Strategies Market Commentary for Wednesday. Sorry, I am all out of flux. This is something new for me, trying to not fall on my face right here, but this is the market commentary for June 2nd. What we are doing here is something new, like I said, but what I'm going to talk about is the economic data, the geopolitical environment, how those impact the markets with some of my market analysis. I'm also going to talk about option strategies I implement into my portfolio based on the assumptions I come up with in my market analysis. So we also drilled down on how to streamline the process on finding the optimal option strategy for any given assumption. We aren't just looking at a bullish assumption and picking a call spread or a long call. No, what we do is we look at the pricing, and that ultimately determines where we are going to price our stocks or our options, whether we're buying them or selling them. All right, so let me see if I can figure out how I can try to share my screen here and see if this works out very well. I'm going to try and play through this as we are working, because something with this I've never played around with. All right, let's see if we can figure out. Does anybody know how to send some feedback, email, check? All right. Let's see. Put that in the corner. No, that doesn't help me out. All right, let's see. Well, anyway, everybody's happy today. Why? Because all of the markets across the board are positive on the day. Right now, we've got crude oil moving higher by about 73 cents. Something to note here, I'm seeing a lot of the stocks associated with oil, the oil industry, seeing some weakness. Yeah, they've made some 52 weeks highs, some of them even all-time highs, but the patterns that are starting to set up around those are starting to look a little bit more weak. So something to keep an eye on. Tomorrow, we're working on a webinar where we are setting up option strategies based on a bullish assumption. Well, this could give us the best opportunity to look at implementing some of these oil stocks into our portfolio to add some negative deltas to our portfolio. Remember, our portfolios, whether it's in our 401k or our IRA, are generally very focused on bullish moves. Well, we've had this whole paradigm or parabolic move to the upside last year, and we're starting to see the markets consolidate. We're seeing some whipsaw moves here where we're rotating out of tech and maybe into some of the blue chips and then back into tech. Really a good market action throughout this last 4 or 5 months, as we're seeing some of the frothier stocks get sold off, and some of these stocks that have really been waiting for the reopening trade have done very well. Having said that, we're seeing crude oil move higher today. Oil stocks move higher today as well, but those oil stocks could be signaling a little bit of a topping pattern here across the board in the energy sector. And then we move on to gold futures. If we're talking about gold futures, they're moving higher back into the 1900. We talked about this in the last couple of weeks. We've been toggling back and forth with that psychological level of 1900. The real line in the sand to keep your eyes on is $1,923.70 if you want to throw it in there, because that is the high we saw back in 2011 when the height of inflation worries were going rampant. Well, now we're back into that kind of same situation where we are seeing inflation really start to ramp up. So gold futures, Bitcoin is going to be another one of those stocks that does very well in an inflationary environment, because a weaker dollar will drive commodities that are dollar associated higher. And believe it or not, Bitcoin really is dollar denominated. All right. And just think about it. Every day we price it, we're pricing it in terms of dollars. All right. So Bitcoin, as we can see, is moving higher as well. The bonds slightly in positive territory, but for the most part, they are unchanged. Now let's get on to a couple of things that I wanted to talk about with these equities, as we're seeing here above the 50-day simple moving average. Player is trying to figure out how I can switch this, if I can add a link. I'm not seeing that right now. We're going to have to play around with this before I can really get this all figured out. All right. Well, At the end of the day, we're seeing the equities move higher after yesterday's weakness, maybe creating somewhat of a topping pattern. If we were to create a top here, some of these are going to look like they had a lower high across the board. Now, E-mini S&Ps have showed, and equities across the board are coming into today, and we haven't gotten a whole lot of data today to really drive the market. So it's more or less going back and forth on the past data we had, and that has been pretty bullish so far. The only thing that we've got was the economic optimism today coming in a little bit higher than expected. That's giving a little bit of a boost to the upside. But chart patterns, we've been talking about this a lot in the daily market commentaries as of recently, and this is one of those setups that's not confirmed, but looking like an opportunity to take advantage of at least a pullback. We could look at it to cover the gap between 91.50 to about 90 or $90 even. There's a gap there that we're going to be looking to cover. So that would be my first target for an underlying to come down and trade, maybe right around $90 even, maybe even print that 89 handle. But ultimately, the pullback I'm looking for is to come back down to the 50-day simple moving average in XOP. And that lines up quite nicely with right around $83 is what I'm going to call it. Because if we go a couple of days, that 50-day simple moving average will get drug up a little bit. So I'm going to call that mark right around $83 as a target. So with that said, we have super low implied volatility. If we look at the bottom of a chart in XOP, we could see that that volatility is at the lowest level we've seen in like 52 weeks. What does that tell us? That tells us that the pricing for this underlying in the options is really cheap, the cheapest we've seen in the last 52 weeks. That's the opportunity to take advantage of buying option strategies. When the premiums are at their highs, we know they're the most expensive. Well, that's not the case here. So that leads me to buying options. And with that said, I'm looking for it to go down to around 82. But my rules for this trade are to look right around that 36 delta, which is right around 34, 36 delta. I nailed it right there around the 34 delta and bought the long duration because I want to limit that theta decay, folks, and bought the SEP 90 puts in there for $5.55. Now, you obviously could do this a little bit better because the market has actually rallied a little bit since I put this trade on. So I'm not trying to do the pump and dump. You obviously can get it better than where I did. At the end of the day, though, a confirmation tomorrow is something that I'm looking for. A red candle for a confirmation. If I don't get it and we print above today's high, then that'll be the catalyst to get me to pull the ripcord on this trade. And that's all I got for you guys. Other than, please smash that like button down there. It really does help us out. We'll figure out all the technical difficulties, so please don't punch me in the gut with that thumbs down. I know I'm working on it, folks. I'm trying to make these a little bit more interesting for you folks. So please help us out. Smash that like button. And please take a moment to check out our disclaimer as we're an educational company. Finally, if you can't smash that, take that. All right, bye for now. Take care and take it easy.